Alrighty everybody, here we are to start off today's video, and we have a great one because I wanted to go through some of the recent announcements that's been made. We're going to go through, read some of the news, and I'm going to talk a little bit about what the details of this show. Donald Trump has came out and made some very bold statements that I think is important that we need to be talking about as we're getting closer and closer towards this election in 2024, and then 2025 being such a pivotal year for crypto, depending on who wins, depending on what laws get passed for Bitcoin and the rest of the markets. I think that this has the very real potential of being our biggest cycle, and I've talked extensively about why that is. But I wanted to get into some of the details, some of the news that's recently broke. Bitcoin has recorded over $39.5 billion worth of new open interest. This is breaking records. This is coming because we have so much new volume entering the market due to the ETFs. Once we saw that Bitcoin ETF get approved, we saw BlackRock, we saw Fidelity, we saw a few other major institutions start actively accumulating Bitcoin for the first time, and we saw way more upside potential than anything that we were accustomed to seeing. I think that this is something that's only going to play out now that we have the Ethereum ETF live and trading. I think that this is going to be really what's fueling so much adoption over this bull run. Bitcoin in the opening market pushed upwards of 70,000. We're only 6% away from a new all-time high, maybe a little bit more now that Bitcoin pulled back just a little bit, but this is something that I think is going to be pushing us into that new all-time high, having all of this new volume entering the market. You know, volume precedes price, and that's kind of the main point that I'm trying to get at here. With us breaking record volume, it kind of just shows that we're about to be making that big push into a new all-time high very soon. Coming over here and reading this story, Harris campaign aims to repair Democratic Party ties with the crypto sector. Up to this point, the Democratic Party has been very much against crypto. Gary Gensler has been somebody that's really kind of had his foot down, saying that Ethereum was a security, saying most cryptos in the market were a security. The Biden administration has really not done a heck of a lot to promote crypto. They've actually kind of done a lot to, tear it down. So we knew that up to this point, the Democratic Party was more or less against crypto. They didn't really want anything to do with it. They've, more or less just passed laws to stifle the growth more than anything. And so once Trump came out and he started to say, hey, you guys need to vote for me if you want positive crypto laws, we kind of saw Gary Gensler have to take his foot off the gas, so to speak, and he had to kind of take that backseat approach, because here's the thing. With Donald Trump pivoting to be pro-crypto, the Democratic Party doesn't want to ruffle any feathers, and they're going to want to try and get as many votes as they can. And so what we ended up seeing was, after Trump pivoted to being pro-crypto, we saw Gary Gensler allow that ETF to go through, the Ethereum ETF passed, and then it was basically proven that it was no longer a security. That was such a big thing that we've all been waiting to understand, waiting for that clarity, and we finally ended up getting that clarity from that point. But the problem is, now that Joe Biden has dropped out of this race, we've had to see Harris kind of scramble to gather more votes. And I think that that's exactly what is happening right now. With her coming and reaching out to these crypto companies, trying to make amends with some of the negative laws and some of the different things that they've had issues with, trying to get some of this growth passed. Having the Democratic Party kind of being so against crypto up to this point, I think that Harris is doing her part by trying to rebuild that same relationship. Up to this point, a lot of the big exchanges, the Winklevoss twins, as well as Coinbase's Brian Armstrong, they've came out and they've had a hell of a time trying to get some of this regulation to go through, and they haven't had very much clarity. Anytime they've tried to go to the Biden administration, they've kind of been shut down. And so I think that with only 4 months left until this election, Harris is kind of doing her part to try and make amends with some of these, companies, and then try and pass some of this stuff so that they'll at least get a little bit more of a vote that way. They don't want to be viewed as being anti-crypto, especially when you have Donald Trump speaking at these conferences and pivoting to being so much pro-Bitcoin. So coming over here, I wanted to read some of the stuff that is basically broken. Donald Trump gave a speech on Saturday at the Bitcoin conference in Nashville, and one of the things that he said, Trump proposes strategic national crypto stockpile, never sell your Bitcoin. It's been talked about that Trump was actually going to be making Bitcoin a reserve asset or a reserve currency of the United States of America, and that actually wasn't something that he talked about, but he did promise never to let the government sell their Bitcoin. The government has a lot of Bitcoin, whether it was from hacks, whether it was from, illegal exchanges, or, like Silk Road when they broke that down. All of these things are ways that the government has accumulated Bitcoin, and they have a huge stockpile of that. So having Trump coming out and saying, hey, if you vote for me, I promise to never dump any of the Bitcoin, That's kind of a bullish statement. The big statement that Donald Trump came out and made was that he vowed to fire Gary Gensler if he was elected. This is something that has been kind of a thorn in everybody's backside over this entire last couple years. You know, Gary Gensler has been very much anti-crypto, calling every other altcoin out there a security for the most part. And Trump has come out and vowed to fire him if he's elected, which realistically he was going to do that anyways. Everybody always brings in their new group of people whenever they're elected. But these are the types of things that fuel narratives, guys. And I really do believe that this is something that's going to be, you know, the driving force of value over this cycle. We have the institutions here. BlackRock's already been buying Bitcoin. But now that we have both presidential candidates that are going to be running against each other, now going pro-crypto, you know, the Biden administration had been against crypto, but now that Joe Biden is pulling out of that race, Harris is kind of doing her part to make amends with some of these, you know, pissed off relations that they've created with these crypto companies. And so I do believe that, you know, regardless of who gets elected, having both of the candidates being a lot more open to crypto, I think it's going to be something that pushes a lot more adoption over this bull run. So for the rest of this video, I wanted to actually go through and map out our cycles. Now is a great opportunity to talk about them. As we've seen, you know, this is now our third true 4-year cycle that we've been a part of. I think that now is a great time to just zoom out, look at the macro view, and really look at where we're at today and how we compare to those prior cycles, because I've noticed a few patterns that I think are going to catch your guys' eye that you definitely want to be paying attention for getting into this cycle, because many people have asked me, are we going to follow a normal trend, or is this something just different? Are we breaking out a lot quicker than ever before? And the answer is, you know, there are some differences for sure. We have kind of done some unique things this cycle that we haven't in prior ones, but I don't necessarily think that it's that far different, and I'm going to break down the charts and explain exactly what that means. So coming over here and taking a look at the 2013 cycle, when we peaked over here at about 1,200 bucks, this is where we're going to have pretty much our longest bull run ever. This was our longest bear market, and I think that the main reason it was so long was just because of the fact we had the Mt. Gox hack at the very top of this bull run. Mt. Gox got hacked, and then after it got hacked, we ended up seeing, you know, at the time, that was 70% of all of the Bitcoins traded were on that exchange. We ended up seeing the longest bear market that we had ever had up to that point being 413 days. This was over a year long from cycle top to cycle low. Now, from where we were at from the cycle top to the point of us making a new all-time high, it's going to be about 1,200 days in duration. So this was also the longest accumulation that we had ever seen to begin a new cycle. You know, from the cycle top to the point of us making a new all-time high, even though we pulled back again, this was 1,200 days worth of an accumulation. That's a significant period of time. And then from the point of us actually going into a new all-time high to our cycle top, it only took 280 days, a much shorter period of time, but that's to be expected. The length of the accumulation takes place below those prior all-time highs. Once we go into a new all-time high, we're really expected to see the true blow-off top type of euphoria price action. So the whole point of being invested into crypto was to get in before that new all-time high, because once that move takes place, that's generally where we see the most upside potential, and it happens in a very short period of time. Now, coming over here and taking a look at this cycle, in 2018, we can see that our bear market was exactly 1 year in duration. So we didn't have quite the same significance. This one was 430 days. This one was only 364 days. So this is where we're going to sync up a lot more accordingly to the last couple cycles. They've been exactly 1 year in duration. From peak high to peak low, you're talking exactly 1 calendar year. Now, from that same point to us breaking an all-time high, it was about 1,100 days. So remember, over here, in this cycle, it was 1,200 days from the cycle top to the point of us making a new all-time high, just under 1,200. And then if we're looking at the 2018 cycle, it was just under 1,100 days. So this one was about 100 days at a quicker pace than that cycle in 2015, 2016, 2017, depending on where you're drawing it. And then we can see that from that same point to us actually going into a new all-time high to our cycle top, 65K, it only took 126 days before we made that peak, but our true all-time high being 69,500 was about 1 calendar year from the point of us making a new all-time high. So very much consistent with our prior cycles. This one took 280 days from us making an all-time high to the point of us actually peaking at about $18,000 to $20,000. So what we see is pretty much the same events. You know, obviously our last bull market was not nearly as parabolic. When we're comparing it to that 2017 cycle, we didn't have nearly the same amount of buy support that we were expecting expected to see. Back in that 2016, 2017 cycle, we had just broken out of like a decade-long accumulation in the stock market. So there was a lot more bullish support fueling new all-time highs. Donald Trump had just got elected and the stock market started breaking out. He passed a lot of positive laws that were really helpful for the economy. And then also, we didn't have a global pandemic, which was exactly what was going on over in this period here. So there wasn't as much buy support, there wasn't as much retail involvement, and I really think that that's why we ended up seeing kind of this double top scenario that played out in that last bull market. But now getting into this current cycle that we're at, from the cycle top that we made over here at the end of 2021 to the very peak low, was exactly 1 calendar year once again. So if you remember, this cycle in 2018 was 1 calendar year, being 364 days. That was right there. And then we can see over here, we saw pretty much the same thing, 364 days from the cycle top to the cycle low. And from that point, if we're looking at our cycle top to the point of us making a new all-time high, this one made a new all-time high technically, even though it was just a barely, past that prior all-time high. This one did it in 854 days. So that was a significantly quicker pace than any of those prior cycles. Because if you guys remember, in that 2018 cycle, this one was 1,100 days, and this one was 1,200 days even prior to that. So for us to be doing that in 850 days, it was kind of a red flag to me, and I was sitting here thinking, man, we really might have an early cycle top because the momentum is just getting too overextended. However, the great news was we ended up getting this 4-month correction in here. So to me, we're right back onto those same path. It's just that, we're at a much quicker pace, but not so much quicker when we're factoring in our 4-month correction, because from the all-time high that we made, yeah, that was a much quicker pace. But from where we're at right now, we're looking at just under 1,000 days. So the pattern that I've noticed here is this cycle took 1,200 days from the all-time high to the point of us making a new all-time high. This one was 1,200. In 2018, this one was 1,100 days from the all-time high to us making a new all-time high. So this one was 100 days at a quicker pace versus that first cycle. And then if we're coming over here and looking at the current cycle today, we're at about 100 days at a quicker pace than the last cycle of 2018. So it seems to be that every cycle is kind of front running by an extra 100 days. This one is 100 days less of an accumulation than the 2018 cycle, and this one is 100 days less of an accumulation than the 2015 and 16 cycle. So looking at where we're at today, I don't think that it's that far off, right? Yes, it's at a quicker pace. We know that we've kind of front run a little bit in comparison to those prior two cycles. But with us having this 4-month correction, I don't think that we're that far off when we're just looking at the macro view. 100 days difference is a decent amount, but it's not that significant. And when we're factoring in institutional investors for the first time ever, to me, it's lining up a little bit more accordingly that we just have more buy support. We can see that in this last cycle, for Bitcoin in 2018, we made kind of this lower high, and then we spent all this time correcting around the mid-range. Even if we go all the way back to 2016, we just made short impulses, higher highs and higher lows, but we very consistently maintained this uptrend, and pretty much just were grinding on this main support for a significant period of time before we started to actually break out. This cycle didn't really do the same type of thing. We've just been at a much faster pace. This was really the only uptrend that we kind of made here, and it was taking all of this time when we were first breaking out of 25K, flipping that as new support right here and right here. And then it was leading into that ETF approval that we saw a lot of buy the rumor, sell the news, right? A lot of people were anticipating that we were going to get an ETF approval. The market started breaking out right here, and then the ETF got approved right there, and we saw that big rejection candle. Bitcoin topped right there and made a 21.5% correction inside of this range. And then it was shortly after that ETF went live that we saw record-breaking volume and a ton of buy support coming in from those institutional investors. And then we saw the Bitcoin price rocket all the way back up and technically into a new all-time high. But a lot of that was hype-driven. We have narratives this cycle that we just weren't accustomed to seeing. In the prior cycle, we didn't really have much institutional involvement. We had the CME futures that opened at the very peak of that 2017 bull market. But aside from that, there really wasn't that much volume entering the market through that CME futures. It was, relatively small. And then if we're coming all the way back into that 2016 cycle, we were basically just making it out of the Mt. Gox attack, and we had to rebuild all of the infrastructure. That was where we saw Coinbase. That was where we saw Bitfinex. Some of those other, Gemini was another one. Some of those other exchanges that came out during that time, they were helping to rebuild the market before our bull market. actually started. And so coming over to where we're at today, we don't have a lot of the negative stimulus. We have a lot more bullish type of use cases. We now have presidential candidates that are pivoting to be pro-crypto. Not only is it the Trump administration that's being very much pro-crypto, but we're now also starting to see that Biden's dropped out and the Harris campaign is trying to make amends with these crypto companies, whereas they were kind of a thorn in the backside. Harris is taking the opposite approach. She's saying, hey, we need crypto regulation. She's probably, at the end of the day, just doing it to garnish more votes, which is going to make perfect sense considering she only has 4 months to campaign to get elected against Donald Trump, which is arguably one of the most popular people in the entire world. So when we're talking about her having to beat, Donald Trump in an election where she really wasn't even the primary candidate to begin with, she really has to do her part to get as many of those new votes as she possibly can, because she's got a much smaller window to be able to make that happen. And so with both of them pivoting pro-crypto, with the institutions now actively accumulating Bitcoin, and now that we have the Ethereum ETF, I do believe that this cycle is just going to be set to be more impulsive and have a lot more of a bullish base and a lot more narratives to kind of go and pull the market higher. In the last cycle, we had a global pandemic, and then most of the infrastructure was really just over leveraged players, whether that was Celsius, whether that was Voyager, whether that was Three Arrows Capital, whether that was FTX or Terra Luna. We had a number of these major crypto companies that were just over leveraged to the utmost degree. And once the house of cards in the liquidity kind of exited the market, we saw all of that house of cards break down, and then all of those lenders, all of those centralized exchanges went bankrupt. So when we're looking at our current cycle, we just made our way out of all of that crap. Now that we have institutions, a lot of money has kind of moved on chain this cycle. We have layer 2s for the first time. And, at this point, we're going to see a lot more money consolidating to existing on-chain. And I really think that with Bitcoin getting ready for this new all-time high, yes, it's at 100 days of a quicker pace, but when we're comparing it to those prior cycles, that's kind of been the pattern that's been forming up to this point. Every single bear market seems to be, about 100 days less before we make a new all-time high. This one having so much more buy support than ever before, I just think that it's, following along with that same trend. And that's kind of why I'm leaning towards, if we're looking at what's going to be playing out as we break out, I wanted to talk a little bit about the altcoin total market cap here, because when we're looking at the altcoin total market cap, it's important that we're analyzing, what really happened to begin those last cycles. If we come all the way back and just take a look at our last bull market, this will give us a little bit of an idea as far as how much altcoins underperformed until Bitcoin went into that new all-time high. Because remember, Bitcoin made its all-time high breakout right over in here. And the altcoins were just right over in here. They had just barely broken out of their bear market bottoms, flipped it as new support, and then we're starting to make that next higher high. But if you guys notice, we're still significantly below those prior all-time highs. Talking 50% approximately from making an all-time high. So we can see that the altcoins lagged pretty significantly. Bitcoin made this big run all the way up to about $42,000. And when Bitcoin peaked at $42,000, the altcoins still hadn't even hit their prior all-time high of that last cycle. Bitcoin pulled back in here. Altcoins actually started outperforming and breaking out. And that was where we saw the first flippening, right? Where Bitcoin sells off and then altcoins start pumping. That happens very rarely in our bull markets, but that's true alt season. Anytime you're seeing Bitcoin actually selling off and the altcoins are actually breaking out, it's the opposite of what we're expected to see. Generally, what's going to happen is Bitcoin's going to lead, altcoins are going to outperform, and then in certain rare situations, we do see that money actually rotate. That was an example of where that rotation took place. It took Bitcoin going all the way from $20,000 to $42,000 and then a sell-off after, before the altcoins finally actually pushed past those prior all-time highs. And to be quite honest, the altcoins, made their big push more or less in the very tail end of Bitcoin's move. Once Bitcoin started to get back up to that 65K resistance, when we peaked around 50 and 60K, that was where the altcoins really started to explode. And when Bitcoin was distributing, making this rounded top type of price action, altcoins were just flying into price discovery. So that was what ended up playing out in the last cycle. The altcoins waited all the way until the very last opportune time that they could before that rotation took place. And now if we're comparing it to where we're at today, the altcoins are still below those prior all-time highs, but we're not nearly as low as the prior cycle, right? If we're coming over here and taking a look at where we're at today, Bitcoin's made this big move, We're right below those prior all-time highs, getting ready to go into a new all-time high for the first time. And the altcoins are just kind of consolidating here in between their mid-range. I do think that this cycle, altcoins are going to end up behaving a little bit similarly, where Bitcoin's probably going to lead this breakout. Bitcoin's probably going to run to $90,000 to $100,000, and the altcoins will break out with it. They're going to also be going up, but we might see the altcoins sitting here at their prior all-time highs, at these range highs, when Bitcoin's sitting up here at around 90 to 100K. We could see a similar thing play out where in this cycle, Bitcoin made that a new all-time high, went all the way up to 42,000 and then pulled back. And it was in that pullback that the altcoins started breaking out. I'm not going to be surprised to see the same thing play out once more this cycle, where Bitcoin makes its first big breakout into price discovery. People rush and FOMO buy into Bitcoin. We see it outperform those altcoin markets. Altcoins make a push back up, but they're still below those prior all-time highs. And then maybe we see Bitcoin pull back in here, and then that's where we really see the altcoin push take place. I don't know for sure. We're going to have to end up just watching and seeing what plays out long term. But this is something that has played out very consistently in prior cycles. Bitcoin always leads those first breakouts, and it was very similar even in the 2016 and 17 bull market. When we're looking at the altcoins being at a higher price point in this cycle versus what we saw in the last one, it's at least more bullish than it's at least more bullish than that last bull market. But we're going to have to watch and see how Bitcoin performs during this first breakout, because I'm not going to be surprised to see Bitcoin rallying upwards of 100K. Altcoins, going higher, but still underperforming just a little bit. And then we're most likely going to be looking at that real distribution taking place around this period. Once Bitcoin corrects and starts that next leg up again, during this period is when I'm expecting the real rotation to take place into the altcoin markets, and then them to more or less just do a lot of the same type of price action that they did in the last cycle. This is typical of altcoins. We can't get too over ahead of ourselves, but I do think that we're very close to that point. Having all of this bullish news and stimulus, record-breaking volume, in my opinion, it's really just telling us that we're about to be starting that next big breakout. And if history has ever told us anything, it's that Bitcoin's going to outperform on this breakout, but that rotation into the altcoins is happening very, very soon. So guys, if you found any value in this video, please do me a favor, hit that subscribe button. If you guys want to see anything I'm buying, selling, trading over this bull market, you have to join the Discord server. I've been posting a lot of new signals in there. If you guys do want to see anything that I'm buying in this dip, links are in the description to go ahead and sign up on my website. With that being said, I love you guys. I appreciate you guys. Wanted to break down the macro view because I think that things are looking very strong. Wanted to cover some news because we have a lot of bullish stimulus that we've just never really had to start a new cycle. The institutions, the presidential candidates that are pivoting pro-crypto leading into an election, we have a lot of upside potential this cycle, and I think that this is the one that we just want to have our positions packed, ready to go, and holding in a price discovery once this move takes place. So thank you guys so much for tuning in, and with that being said, I'll catch you guys in the next one. As always, peace out.